Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, April the 30th, 2019, and this is the Daily Report for Gold and Silver. We have, with the exception of platinum, the precious metals complex trading higher on the day, and the majority of those gains are due to dollar weakness. The FOMC meeting did kick off today, will conclude tomorrow with a press conference at 2:30 Eastern Standard Time by Chairman Jerome Powell, and traders, analysts, and market participants are waiting with bated breath to see what he has to say. Let's take a look at current pricing. First of all, gold did close higher on the day, up $3.90, and it is currently fixed at $1285.40, but that changes 0.30. And when we compare that to the dollar index today, which closed down by 0.36%, we can see that today's gains in gold were over 100% dollar weakness based, and there was actually a little bit of selling in terms of the components making up today's pricing. Silver did gain on the day, gaining about 4 cents, $14.97, and the only precious metal to lose some ground was platinum, closing off by about $9.40. That's a full percent plus decline, currently fixed at $891.90. And lastly, palladium went the opposite way, up about 1.27%, a gain of over $17, and is currently fixed at $1379.30. Let's take a look at our technical studies. Although we did see gold move higher on the day, as we spoke about yesterday, the overwhelming characteristics, as far as I'm concerned, is a defined compression of range. What we can see right here is that over the last week in trading, we have had a succession or a series of higher lows. Now, we had higher highs going in last week, and then at the beginning of this week, of course, this being Monday's candle, this red candle here, was the first day in which we began to have lower highs, and today another lower high. And of course, if we draw our upper level resistance line from the highs occurred at the beginning of April, we certainly can see that we have a compression triangle forming in the market, and we're extremely close to the apex. The other thing that I am noticing, and is a little bit concerning to me in terms of any kind of an upside move, is when we take a look at our current moving averages, and I'm speaking specifically about the 50-day and 100-day moving average, and the fact that they are converging or going closer together, and it does appear as though they could be forming a death cross. However, realize that the moving averages are an extremely lagging indicator, and as such, we would not see a change in the market for quite some time, even after we saw a key reversal or a pivot point. And I still believe that we did see that just last week when the market hit these lows that came in at 67. That was this low here. And then since that, we had that series of higher lows, and that has consistently maintained itself both last week and this week. What we got this week that was different, though, was a series of lower highs, and that is truly a range that is compressing. With the fact that the FOMC meeting began today, and there will be a press conference at 2:30 Eastern Standard Time tomorrow, we want to look very closely at what he has to say, and if there is any variation, of course, from the perceived notion that they're going to leave interest rates path, then we could see a major spike up or down depending on what that statement would be. However, until that point, my recommendation is to maintain our current neutral stance with no active trades in gold or silver. And traders, another interesting facet of recent activity in the precious metals market, specifically gold, is the fact that when we look at the dollar index and we look at the last 3 days of trading, it is clear that this market has been trading under pressure and moving lower. However, whereas today the dollar weakness was more than any buying that came into the market, yesterday, we had a fairly sizable decline in pricing, and that was also with a weak dollar. So here's a day yesterday in which dollar weakness was not enough to overcome the bearish sentiment, and today dollar weakness was. And so that's an interesting facet. But what we can say with some clarity is the fact that this particular level, which is 97.70, is a defined resistance area. And although we traded just a little bit above that, we have now traded back into that territory. Lastly, I do want to take a look at palladium because we have an interesting scenario building in this market. And if you recall from yesterday's show, we talked about the fact that what we were witnessing in palladium was how it was kind of hugging this 100-day moving average, this particular moving average line. And what happened today? Well, yesterday we had the low come in precisely to the 100-day moving average. Today it opened above the 100-day and closed above the 100-day. However, the lows came in and below, broke actually below that. But the fact that it was able to open and close right at the 100-day moving average tells me that there is strong support at this level for palladium. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the FOMC update. Bye-bye.